Hello and welcome to this analysis. Now, in today's video, I've covered Ashok Leyland. Ashok Leyland is a flagship company of the Hinduja Group into domestic, medium, and heavy commercial vehicles. It has a presence across the country as well as 50 countries overseas. Fully integrated manufacturing unit. It is the second largest manufacturer of medium and heavy segment commercial vehicles in India, fourth largest manufacturer of buses in India, and globally the 15th largest for trucks. Um, it has a revenue of the commercial business part of it is at 88%, while the financial services it offers is at 12% of its revenue. Indian revenue is large, basically Indian revenue, which is 89%, while the overseas revenue is just a tiny 11%. Manufacturing, it has five manufacturing plants in India, one in UAE, one Bangladesh, and one in Sri Lanka. The market cap of 59,402 crores and a return of equity of 15%. Its trailing 12-month PEG ratio is at zero point 0.1, which is fairly low. Promoters hold 51.52%, but it's got a very high pledge, promoter pledge at 22%. FII holding is 21.45%. Domestic institutions hold 12.23%, while the public holds a significantly small amount of 14.72%. It has been seeing some increase in debt year on year basis while also seeing a declining net cash flow. Now let's have a look at the charts, and I have got in front of you the quarterly charts from its the data we have from 1999. Significantly, you can see the stock making higher highs and higher lows. So the higher highs coming in October 99, Jan 2008, July 2010, again July 2000, January 2018, and higher lows October 2000.com, October 2008, the subprime crisis, 2013, and again the COVID lows of January 2010. But significantly, stock keeps on bouncing off very sharply. But interestingly, let me show you something out here that first, it's a parallel channel running in the quarterly charts, and each time you can see significant corrections in the stock. So the first one, the subprime one, is 78%. Then this rally sees another fall of 78%. Then again, the COVID time saw a 78% correction. So each large correction for Ashok Leyland is 78%. Look at the bounces we are seeing from the lows. The first one is 1.27x Fibonacci. Second one is a solid one, which lasted from uh, July 13 to Jan 18, which is a significant 5 year move, 4x Fibonacci, and from the COVID lows, it's just 1.27 Fibonacci. So, comparatively, this was a larger move we saw from 2013 to 2018, and from COVID lows, not so much of it has yet been done. Now, the support for the stock in the quarterly charts is at 150. That's the Ichimoku conversion line, and then at 100, which is the Ichimoku 120, which is the Ichimoku baseline from there. So the next one, let's have a look at the monthly charts. Now, in the monthly charts, let that open. We'll have a look at it. Yeah. So monthly charts, the support is coming at right now at 150, which matches with the Ichimoku quarterly charts. The baseline of the Ichimoku monthly is at 150, and then below that, all the way around 100, 90 to 100 is where this trend line support in the monthly comes in. Now let's have a look at the weekly charts and try to analyze what the weekly charts are telling us in that. So the weekly is also got a support near 180 bucks. So much better than the monthly, much lower 80, and then is 150, which also tallies with our week monthly and quarterly. And you can see in the weekly some kind of a trend line breakout took place from one end of the channel, and here also we have coincidentally another channel running. You can see another parallel channel running. What was the quarterly, now in the weekly also we have a parallel channel nicely moving up, side by side, with a trend line breakout which has done significantly well in this particular week of 9% high. This particular week we saw the stock doing, and now out here. Let's have the look at the daily time frame of Ashok Leyland and see what it looks like there. So in the daily time frame today, it has made a bearish harmonic deep grab pattern. Now, just because the pattern is made, it does not mean that it will give us an immediate reversal from here. For a reversal confirmation, I would ideally wait for a daily close to happen below 200. Till that does not happen, a daily close below 200, I will not take this pattern so easily right now because of the strength of the stock. But yes, below 200, the stock could decline all the way down to this breakout area of 185 to 180. And if that does not hold, yeah, so 170 is what there's the next huge support. So any pullback of this bearish harmonic pattern would result in 180 to 170 coming, which is also a higher time frame cluster support. Now, for this pattern to fail, it will have to breach above this trend line out here at 210, which was the weekly parallel channel running. So anything above 210, the pattern fails. Else, this pattern could stretch up to 210 and then turn. We will look at, I will review it probably at that time whether it is going to work or not. Anything above 210, pattern fails, and right now below 200, the pattern gets activated for the down move. Let's have a look at the hourly because it's a derivative stock. Now, in the derivative data, the futures data, today was a flat day for the stock in spite of a strong sell off in the Nifty and other sectors. But it was a mildly positive, just 0.27%. But there is, even the OI change today is very negligible, 0.81, so not much of long unwinding. But coincidentally, the last 5 days has seen a 14% rise in the stock and even a 14% high in English. So the entire 14% move, what we are seeing in the last 5 days, is very insignificant in terms of fresh open interest build up in the stock. So not much fresh money has been added into it. More of short covering or long unwinding, that kind was taking place. But less, that's the alarming factor of the last 5 days comparatively. If we go to see now in the hourly, the support is at 195. Below this is the 200 which I am looking at, a daily close below that. Otherwise, 195 to 185 is, that's where the next major support comes in the hourly. So now that we've assessed where the support levels are, let's have a look at the potential targets for the stock. Now, because the stock is at an all-time high, so I'm not looking at lower time frame levels to signify where the resistance are. So for according to me, the resistance in the immediate short term, like I said, the parallel channel of the weekly at 210, above which the harmonic pattern gets negated. Above that, the next resistance is coming at 250. That's a significant jump from 210 for the stock. And then there is the Ichimoku price and time theory target of 320 approx. So since it is a higher time frame thing, so anywhere between 300 to 325 is the next big wall for it. Anything above that, we know that the upper trend line on the upside could be targeted. Further continuation, one can draw these parallel lines and further check it out how it is moving. Now, I hope this video is of help to you. So to please do like it, share it, and do follow me for regular stock updates. A disclaimer: this is not a trading or investing advice to you. This is a video purely based on educational purposes using the studies of Ichimoku, harmonic trading patterns, and Fibonacci. Kindly do your study thoroughly before taking your decision of trading or investing in the stock, and manage your risk, and always respect the support and resistance levels. Until then, happy investing and trading.